Well, it's been an exhausting week for U.S. stocks. They rallied today, though, up nearly 300 points, rebounding from a two-day sell-off that slashed nearly 1,400 points for the Dow, left the Nasdaq on the precipice of a correction. Let's bring in the money pros. Altium Wealth Management Portfolio Manager Michael Lee, Kingsview Asset Management Chief Investment Officer Scott Martin. Is it over, Scott? Are we out of the woods?
Let's put it this way, EMAC. We're out of the woods. It's over for today because the market's closed. I mean, that's about the only certainty I think we have here, which is a relief, right? So we get a few days off. I'll tell you, though, we're getting there. I think the market's behavior in the last couple days is indication that a bottom is nearby. But I think we need one more or two more days of that absolute flush, that total kind of selling, almost, panic frenzy, and then you'll see buyers come in and put a firm bottom in.
Do you think that's coming next week, Scott Martin? Do you think that's going to happen?
I do. Now, remember, we've got a little bit of a wild card here with earnings to EMAC next week, which will be active anyway. So you mark that with, say, some frenzy selling, some rough earnings. That could be the time to start buying.
What do you think? More October surprises, Michael Lee? What do you think?
As interest rates tick higher, I expect volatility to stay elevated.
Are we going to have this further downturn, like Scott just said? Forgive me. Is that going to happen?
We could see another 5 or 10% to the downside somewhere here. We could fully recover, but I think we ultimately head much higher as the economy is almost as good as it's ever been in the history of the United States.
That's a great point. So we're talking a correction if you're talking 5%, 10% to the downside, Mike, right? Is that what you're seeing too, Scott? A correction?
Yeah, we're definitely going to have some hiccups.
Okay, what do you think, Scott? A correction?
Yeah, I think Mike's right, and he's right, too, in that fundamentals will ultimately win out, EMAC. I mean, the Fed, to me, is still a dove in Hawk's clothing. I've been saying that for a long time, but the Fed, it probably has one or two more interest rate hikes in it, and then if you see rates keep ticking up like they are on their own, if you see the economy show indications of slowing down, they're going to back off. They're going to listen to the market and not go too far, so I think that could actually end up saving equities in the long run.
You think, Mike, do you think that the president should be going after the Federal Reserve here? It's kind of unheard of in U.S. history.
Yeah, no, especially because I think he's wrong. I think the Fed is doing him a favor. I don't think it's the Fed that's stupid. I think it's the people that are selling their stocks that are stupid.
What do you think, Scott? Do you think the president should be lecturing the Fed? Some say many people agree with him on Wall Street.
I don't know how they can. It blurs the lines, EMAC. I mean, it really calls into question that politics that the Fed is trying to play or not play, as it were. And you got to get rates back to normal. I mean, the economy's growing at 3.5%, 4% now. It's going to do it again this quarter. And so, to me, the Fed is following the right playbook because ultimately you've got to get rates back to a normal level. And whether that terminal level is 3.75%, 4%, 4.5%, that's determined by data. That's where we should be.
So go ahead, Michael Lee. You think that the upper bound is 3.5% to 4% on the rate?
Yeah, absolutely. Scott just really hit the nail on the head right there. That what I'd also add to Scott, though, is that as we're raising rates, you're actually doing a lot of help to savers. And a lot of people out there are going to start seeing some return on some money that they haven't seen for a decade. And as a result, they're going to spend more money. Yeah. So while it seems like these higher interest rates are causing volatility, the short-term shocks, they are doing a tremendous benefit to the economy by normalizing interest rates.
It's an important point. Scott, for the viewers' sake, when we see the robots and algorithms taking over, you get those sharp V-shaped actions to the downside and sharp moves up. That's what we have to deal with in the future, right?
Yeah, I mean, some of those days, EMAC, we had one in the morning yesterday. You know, it's like standing on the train tracks and trying to jump out of the way as the train's coming. Right. Just be careful when you see that market action because you can't always benefit from it.
Michael and Scott, you guys have been terrific. Please have a good weekend. Good stuff. See you next week.